Dubai real estate has reached its highest price level in history. Means if you are buying in today's market, you might end up buying at the top. So with all this project, how do you know if a project worth investing in? Hi, Assalamu alaikum. This is Kauthar Mirjoop with you, a property consultant in Dubai with a master's in economics. I bring analytical and data-driven to real estate. In every video, I study the charts, the numbers, and the latest transaction to help you see the full picture of the Dubai market. Because let's be clear, real estate it's not about opinion, it's about facts, history, and strategy. And this is exactly what I'm here to share with you. Now, before we jump into strategies, let's update ourselves on where Dubai stands globally. Because to really understand if Dubai is expensive or not, we need to compare it to other world-class cities, right? So Dubai isn't just popular in the region, now it's on the world stage for property growth. According to Savis, by the way, who doesn't know Savis, it's a global real estate consultancy. They track property prices worldwide. So according to them, Dubai ranks in the top 3 cities worldwide for luxury property price growth in the first half of 2025. And in the Julius Baer Global Wealth and Lifestyle Report 2025, Dubai jumped 5 places to rank 7th globally in terms of luxury cost of living, overtaking cities like Paris and New York. So by now you would understand that Dubai is not just a regional hub, it's truly on the global stage. Now, even though Dubai real estate has reached its highest price level in history, here's the interesting part. Dubai is still undervalued compared to big cities. Let's see together.
So let's look at this global comparison table, July 2025, as you see here with me. Dubai is $458 per square foot. The good thing is it's giving you 16 to 18% year-in-year growth. The forecast is saying like it's going to give you more 5 to 10%. And the key insight or the reason behind this result is the strong investor demand, tax-free, golden visa driver, and same for Abu Dhabi. But if you see other cities like Paris, London, and Hong Kong, there is a decline in the property price, like -3%, -7 to 8%. And you see the price per square foot here reaching 15, or you can say here 1600 per square foot. And in Monaco is 5,000 per square foot, which is crazy and barely giving you like 1% year-in-year growth. So what we see clearly here is that Dubai is still undervalued compared to all the other major global cities, while like New York, Hong Kong, London, Paris, and Singapore are 2 to 4 times more expensive. Dubai continue to grow strongly, backed by, like as you see here, fundamentals like demand, investment inflows, and lifestyle factors.
So when you look at all these numbers, you will realize that Dubai still has room for capital appreciation, even though we are at high record locally. But we cannot ignore the other side. You probably heard this: Dubai will crash, Dubai will correct, prices will drop, right? But before answering this, let's go back in history.
Just to be clear before I start, I'm using this chart just to give you a general idea of what happened in Dubai's real estate market over the years. If you pay attention here, like there is index value over the years. I'm going to give you the price per square foot over the years. Okay? Just think of it as a story of cycles, ups and downs, as you see. That will help you remember it and understand the market better. Because like why I'm sharing with you this, once you know the history and understand the history, you will see more clearly where we stand today and where we could be heading next. Between 2006 and 2008, like optimism in Dubai real estate was sky high. In prime areas like downtown and Palm Jumeirah, prices were reaching almost 2,000 dirham per square foot. Imagine I'm talking about almost 20 years ago. As you can see here on the chart, prices shot up very quickly. The market was overheated with speculation. But then in late 2008, as we all know, the global financial crisis hit. And you can see here on the chart very clearly, prices corrected very sharply, falling by more than half in many areas. And like at that time, it was a mess. Developers ran away, investors backed up, and they were stuck, and confidence in the market was shaken. After the crash, Dubai started recovering from 2011 onwards. Prices climbed again by 2014, 2015. Prices peaked at around like 1200 dirham per square foot. You can see here this rise on the chart. And one of the reason, like if you remember, it was in 2013. If you follow me on Instagram, you would know this. In 2013, it was the announcement for Expo 2020, and there was a strong demand, pushed the market back up. So then the market went into another correction after the oil prices and the US dollar got stronger, remember? And oversupply became a problem. By 2018, prices slid down again, averaging around 1000 dirham per square foot. On the chart, you can see this long, like steady here decline. In 2020, COVID hit. The pandemic, the market dropped to its lowest point of the cycle here, around 950 to like 958 dirham per square foot. You can see that. But starting in 2021, recovery was strong. Demand from investors, end users, and international buyers pushed price higher. And remember, I talk about Expo 2020. It was delayed to because of the COVID to 2021, and that was one of the reasons as well that pushed the price. And if you look at the chart today, you see Dubai has reached a new high around like 1500 per square foot on average across the city. I'm not talking about the prime areas like downtown now, almost like 5,000 and more per square foot, 5,000 dirham per square foot. So this price of 1500 is on average across all the city. As I already mentioned, that Dubai real estate prices already hit its highest price level in history.
Going back to the present, Fitch Ratings has already warned that prices in Dubai could face a correction up to 15% by the end of 2025, mid 2026, mainly because of oversupply in some segments of the market. And with that comes the hard truth. I read some report they're saying 80 to 85%, but not sure. So let me say like this. A large portion of today's off-plan project will lose their value if prices will correct, mainly because mostly are overpriced and numbers just doesn't make sense, so most likely are going to lose their value. Let me again take you with me a quick step back in time to give you an example. Now, a lot of people who invested during those years in the wrong project, they had to wait a long time, 4, 5 years, and even more before they saw any movement. And for many of those projects, prices didn't really increase at all.
So you see these charts here represent different communities in Dubai, and you will notice they all tell the same story. Prices were high in 2014, 2015, then they dropped consistently, hitting the lowest point in 2020. After that, we see a recovery, but even by 2025, which is today, prices are still not higher than they were 11 years ago, which means investors who entered in 2014 and they are still holding their unit in these communities are still waiting for profits till today.
But, and there is always but, what if I tell you in the middle of this project that struggled after the correction and during COVID, there was project protected their value even though. And one strong example of this project, Dubai Head State Community.
Okay, here we are. Dubai has a state community. Just let me quickly open the chart. Okay, perfect. Just as you see here, I already put it on resale because here where the real things happen in resale. And if you notice, the chart is already different compared to other communities. So Dubai Hill Estate was launched in 2014, and let me show you where it stands out. Like if we analyze the chart here, we notice something very interesting. From 2017 all the way through 2020, Dubai Hill Estate prices stayed almost flat, and yeah, it dipped down, like if you see here, from 890 till to 780 per square foot. But if you can see here closely, in 2019 2020 it stayed flat. Like you can see, like unlike other communities that faced a heavy hit during COVID, as I already show you, Dubai has somehow managed to protect the value of its property and even multiplies the price during like 5 years from 2020 to 2025, like from 780 per square foot to 2320 per square foot. That is almost the triple. So here you can see clearly that Dubai Health Estate is a textbook example for a resilient community. It corrected but also recovered faster than most projects.
So, after all of this, here's the big question comes. How do you find a project like this? A project that holds its value no matter the cycle is. And most importantly, how do you make sure that you enter at the right time? So the hidden formula that I personally use to evaluate every real estate project in the market is what I call the 3+1 rule. Let's take it further. And the first one is the scarcity factor. Choose something unique, something very hard to copy. For example, Palm Jumeirah, waterfront living, polo field, championship golf course, and so on. Like, for example, when I say developments like golf course, championship golf course, and polo field, it requires a massive amounts of land, which is very rare in Dubai. And on top of that, the maintenance of such facilities is extremely costly and complex. So whenever you find a project that integrates this kind of developments, you already know it carries a special level of exclusivity and long-term value. And here's an example.
Okay, so let's take this transaction as an example. This villa was previously sold out for 43 million, and in 2 years only it was sold out at 200 million. That's a 365 capital appreciation. Like, very few communities in Dubai can deliver this kind of growth. And you will ask, what makes Hills Grove in Dubai Hills truly unique? I'm gonna say simply is its scarcity. First of all, the numbers of the villas here was extremely limited. Secondly, each villa is sitting on a massive plots overlooking the championship Dubai Hills golf course. And this simply shows how picking the right project doesn't just protect your investment, it actually multiplies your wealth.
And the second one is infrastructure. Very simple. Just invest before major infrastructure is delivered, like schools, mall, hospitals, metro line and road, many more. And I guarantee you that your property value will increase at least 50% to 100% after delivery. And here's the example.
Okay, so let's look at this transaction together here. As you see, this is Maple, Dubai Hills Estate. So this is townhouses. So as you see, this property was sold out for 2.1 million at just like 970 per square foot. Fast forward, in 2024, the same unit was sold out again at 4.8 million. That's like 2,210 per square foot. That means in just 4 years, the property price more than doubled with an increase of around like 128%. So you will ask like what happened during like these years that make such a big difference. Let me tell you, between 2020 and 2024, the whole community around this project completely transformed. Like, for example, if you know the Dubai Hills Park, the longest park in Dubai, was completed and opened. Like the Dubai Hills Mall as well was delivered in 2022. And as well, schools, hospitals, and even the road connectivity improved. So, this is the power of infrastructure. It's not about the property itself only, but about the lifestyle and facilities and community that get built around it. And that's exactly why this property doubled in value in just a few years.
Third rule, government plan. Easiest thing to do. Check if the project or the location is part of Dubai 2040 or D33 agenda. Check how much the government is investing in that area, because these areas get priority in infrastructure and regulation. So invest where the government is investing, your easiest indicator for future growth. And remember, I name it the 3+1 rule for a purpose. Like, if you find in a project 2+1, invest. 1+1, invest. 3+1, invest. But 3 alone, 2 alone, 1 alone, never invest. Let me explain. The one that I was talking about, and the most important factor, is the developer. Of course, always check the developer's track record, the developer credibility. Like for example, Emaar. Emaar, they have huge record. Dubai is Emaar. Like Burj Khalifa, Dubai Marina, downtown, Dubai Hills, the Valley, everywhere you will find Emaar. Everywhere, Emaar beachfront, Emaar, 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 Emaar. So they have a very strong track record because again, a proven history means better delivery, better quality, and long-term support, right? So by now you understand to invest wisely, you need to focus on scarcity, infrastructure, government master plan, and trusted developers. Enter early, plan for risk, and think long term. And since our project today is by Emaar, let me give you a brief about Emaar. So Emaar is the largest in the Middle East and ranks as the second biggest construction company in the world after China State Construction. What makes Emaar stand out is their focus on infrastructure. They build master communities and they build malls, schools, hospitals, not just building. Create an ecosystem where value grows naturally over time. The funny thing when I entered real estate, when I used to pitch many projects, many developers, investors didn't even care about it. But when I mentioned Emaar, they listened carefully. And why? Because investors, they already saw the profit. They experience the appreciation that makes them loyal to Emaar. Now by now I feel like I'm doing advertisement for Emaar, but who worked with Emaar and invest with Emaar, they really know what I'm talking about.
Alright then, we already talked about the developer Emaar, one of the safest and strongest names in the market. Now let's complete the rest of the formula. Remember it? Scarcity, infrastructure, and government plans. Yes, when we put all of these together, we get what I call the 3 plus 1 rule, a simple but powerful way to evaluate any project. And today I will show you how the Grand Polo Club and Resort checks every box of this formula, making it one of the most exciting investment opportunities in Dubai right now. Okay, so let's start with scarcity. I know from the name of the project you would know by now it's the Polo field, but it's way more than that. The master plan of the Grand Polo Club and Resort is a 60 million square feet. Like, to put that in perspective, that's bigger than the entire country of Vatican City. But here's the interesting part. It's not just about size, it's about how that land is being used. Almost 17 million square feet, around 30%, is dedicated purely to open green space. That's rare in Dubai, where most developments here push every inch into buildings. And then you have got the polo field and stables, 3.6 million square feet just for that. Imagine 47 football field lined up. That's the kind of scale we are talking about. So this isn't just another development, it's like a city within a city. Luxury homes, massive green areas, and world-class polo facilities all in one place. Imagine this, back in 2022, someone bought a villa in Polo Homes at around 1,373 dirhams per square foot. Fast forward just 3 years, and that same property is now worth 3,435 dirham per square foot. That's not just a small gain, that's a life changing appreciation in such a short time. And here's the thing, this isn't by chance. Communities built around polo fields or championship golf courses have always outperformed the rest of the market. Why? Because they're rare. You can find apartments or normal villas in every corner of Dubai, but you can just create another polo field or an 18-hole golf course overnight. It takes massive land, years of planning, and huge investments. That scarcity is what makes them so powerful. It's the same reason these types of properties usually trade at a 15 to 25% premium. People want what's exclusive. They want what's prestigious. So when you look at it from an investment point of view, this is exactly why scarcity pays. And on top of that, the entire community is designed with only 22 clusters. That means the number of villas and townhouses is extremely limited. So when you buy here, you are not just getting a home, you are securing something truly rare and exclusive. Now let's talk about infrastructure. This project couldn't be more strategic. You are literally 5 minutes from Al Maktoum International Airport, which is set to become the largest airport in the world. By the way, who wants to know more about Dubai South as an area? You can watch my previous video, I talk about it in details. So this project, it's only 20 minutes to Dubai Hills, 28 minutes to Dubai Marina, 35 minutes to downtown Dubai, barely half hour. So talking about the connectivity, it sits right at the northern corner of Expo Road, E77 and Emirates Road, E611 here as you see, with direct access to highway and the upcoming metro extensions. Plus, if you pay attention here as well, it's next to the other premium Emaar projects like the Oasis and the Heights. So from now you would understand like you are already in an elite neighborhood corridor. Now, inside the community, you will have a retail and dining village with boutique shops and supermarkets, a community school right inside the master plan, healthcare facilities, mosques, landscape gardens and walking trails, a clubhouse, pools, fine dining restaurants, and equestrian academy. So when I say this is a self-sustained luxury destination, I really mean it. You don't need to leave the community for anything. It's all there. And now let's talk about the government plan, and here's where it gets even more powerful. Dubai South is not just another development area, it's one of the largest master plans in Dubai's future vision. Billions are being invested here. Now let's talk about the government plan, and here's where it gets even more powerful. Dubai South is not just another development area, it's one of the largest master plans in Dubai's future vision. Billions are being invested here, and the government is shaping it into a fully self sustained city. We are talking about, like, for example, I already mentioned in my previous video as well, you can watch it. We are talking about the Pulse Mall. If you remember, I already talked about it in my previous video as well, and I told you invest before the infrastructure is delivered. Remember in this video as well. So the Pulse Mall will be a major retail and lifestyle hub. And as well, the Wada Master Plan by BT Properties, it's bringing new schools, mosque, and even a hospital. And it will be like more parks, wellness spaces, and commercial hubs. Like that will make Dubai South not just a place to live, but a place to thrive. All of this will push the price to go high. And don't forget the expansion of Al Maktoum International Airport. I already talked about it. And last but not least, the Grand Polo Club and Resort itself has a massive 41 billion dirham investment behind it. Actually, that kind of backing plus government support, that's exactly what investors should look for. So when you put it all together, scarcity of land, world-class infrastructure, and government-backed mega plans, this isn't just a place to buy, it's a chance. Really, it's a chance to be a part of Dubai's next success story. That's the power of the 3+1 rule. And if you are looking to make a smart move in this market, this project checks every single box. Remember, there are only 22 clusters in the Grand Polo Club and Resort, with 10 clusters already launched and completely sold out. That means demand is moving extremely fast. And the next cluster is expected to have a very limited villas, and exclusivity here is even higher because it's positioned as one of the last clusters facing towards the Polo field. A view and lifestyle that simply can't be replicated once these pros are gone. And remember the transaction of 200 million, the example that I gave you in Dubai Hills Grove. And if you missed the first 10 clusters, don't miss this opportunity. The next cluster could be the last facing the Polo field, and exclusivity here is guaranteed.
So by now we have looked at where Dubai real estate stands. We have studied the history, chart, and the latest transaction as we compared how different communities performed over time. As I showed you as well, investing wisely is not about guessing, it's not about being optimistic, it's about numbers, history, and as well a good and smart strategy as the rule 3+1 that you can apply it easily whenever you want to evaluate any project. As we apply it on our project Grand Polo, and you see that this project truly stands out in today's market. At the end of the day, my goal is simple, is to give you clarity in a market full of noise. Because when you invest with knowledge, you are not just buying a property, you are building real wealth. And whoever is interested in this project, my number is in the screen. You can contact me directly to book your unit before it's too late. And last but not least, if you find this video valuable, make sure to subscribe and like and put your comment below for more. And see you in the next video. Bye bye. في أمان الله.